Welcome back. Well, a good start to the trading session. We're still holding with a gain of around 80 points. The Nifty Bank, well, that's moving between red and green terrain. For the time being, it's recovered some of those losses. It's up closer around 80 points out. In the breadth of the market, two stocks advancing for one stock that's declining. So that's good news as well. So let's turn the spotlight on one such mid-cap stock, Gravita India. It reported a good set of numbers. In the last few days, the stock has seen a big run. Today, it's down closer around 3%. But if you pull up a last 1 month chart, you'll see the stock is being seen a fair bit of action. To understand what's the outlook from here on, Mr. Navin Prakash Sharma, the ED at Gravita India, joins us on the show. Hi, Mr. Sharma. Good morning and good to see you. And thanks a lot for joining in here on CNBC-TV18. Let's talk about the industry first. Could you tell us, in terms of the, the total lead recycling industry, how much of it is in the formal segment right now, and how much of it is informal? And the next 2 years or so, how do you see that changing?
Yeah, so lead industries, we produce around 1.1 million tons of lead from recycling. So the primary producer is only one producer in India, which is Hindustan Zinc. They produce around 2 lakh tons. 85% of lead in India is through recycling. And this industry is going with a CAGR of 10 to 12%.
Okay, all right. So, but in terms of the industry size, the reason why I'm talking about this is because Kotak in their note, they are saying that as of now in the recycling segment, let's leave Hindustan Zinc aside, in the total, the unorganized market or the informal market is actually bulk of it, 75-80%. But in the next 2 years, because of the stringent changes, they believe the formal segment will gain more. Your comment on that, and what is your current market share in the formal segment?
So currently the formal sector is around 60%, 40% is informal. And with the policy changes like introduction of GST, and later on there are some regulations which have come like battery waste management rule, they will bring more towards the formal sector. So we foresee that there should be a great shift from the informal to formal sector. And we foresee that government will bring certain changes like reduction of taxation of end of life products. Like there is around the world, there is no tax on the end of life products. So they should bring some changes in the reduction of taxes or bringing them under reverse charge mechanism, wherein the tax is already included when the consumer dispose their product to recycling companies. So these things will bring certainly some changes into informal to formal sector. And currently among the formal sector, we are having our pan-India presence, and we have our share of around 15 to 18%.
Okay, Mr. Sharma, hi, good morning. I wanted to understand in your core segment, which is your lead business, what is the kind of volume growth that you are assuming both for FY25 and FY26?
We foresee a volume growth of CAGR 25%. So we are maintaining it since last 10 years, and we hope to maintain in time to come as well.
Okay. So 25% in both FY25 and 26, is it?
Yes. It will remain for another 3 to 4 years.
Okay. And this does not include volumes from the lithium-ion battery business. How much could that be since things are picking up there?
That new business will be separate, and we foresee that growth in that segment will start only after 2027, when there will be availability of lithium batteries from auto sector.
Okay, all right. So lithium-ion batteries as well as steel, they'll start contributing in a bigger way, say from 2027 onwards?
So there will be other products recycling which we plan to go, which includes steel, paper, and lithium batteries. And we foresee those numbers only after 2027.
Okay, all right. Now, value-added products, VAP, that is the focus area for you. And it's gradually been moving up towards that 50% mark. So for the current year, what will VAP contribute? And also, if you could tell us how much margin expansion can you see from what you reported in FY24? We're aware that the other income component as well is included in your margin calculation because you believe it's part of the operations. So VAP and margin improvement, how much will it be?
So we will be shifting more value-added products in every segment of ours. So we expect that that should increase to at least 60% in next year. And our margin improvement, like we are maintaining a PAT of 35% CAGR.
Okay, 35% CAGR. And what is the ROC that you're targeting? What is the consolidated both ROC as well as the EBITDA per ton that we can expect in the next couple of years?
ROC is around 25% and
Okay.
EBITDA per ton is around 16 to 18 rupees
Okay.
per kg.
Okay, all right. And if I had to ask you about the margin number, sir, it would be fair to assume 100 basis points extra you give us, that you're looking at the EBITDA compounding at 35% growth is what I understood from what you said. So there could be
Yes.
100 basis points improvement in this year in comparison to last year?
Yes.
Okay.
It will
Now,
be
Raman-
basically not in 1 year, it will remain in the long run. When we say CAGR 35%, it includes some year, maybe some less, but overall in 4 years, you will see it is 35% CAGR.
Okay, you want to give us a margin outlook from year on, you're at around 11%. So for this year, will it be better than last year? How much will it be better? 50 basis points for this year?
It will remain not to 50, but yes, certainly it will improve.
Okay, you don't want to quantify that, but you're saying the trajectory from year on will be improvement. Got that.
Yes.
Could you tell us, what is the guidance on the debt? Give us an updated debt number. And your working capital got stretched a little bit in the past year. Guidance on both these two, because you have a big capex plan, and tell us what should your working capital days look like in the coming year?
So current debt is around 450 crore, and we have a capex plan of 6 to 700 crore in next 4 years. Initially, in next 2 years, it will be 250 crore, and these capex should generate a revenue of 8 to 9x.
Okay, 8 to 9x, got that. So what is your peak debt, sir? And you have to comment on the working capital days as well. What does that come down to?
So working capital days is around, currently we have 80 days, and the peak capital debt is around 450 crore.
It won't go much higher, because so this entire 600 crores that you're talking about of capex will mostly be funded by internal accruals.
Yes, it will be from internal accruals.
And given the kind of run up that you've seen in the stock price, do you think you want to come to the market to raise some equity?
As of now, there is no such plan.
Okay, so this 25% CAGR that you're looking at, the volume growth for the next 3 to 4 years, I'm sure this will come with some capex as well. You have spoken about 600 crore capex by FY27. Are you on track to doing that? And what is the capex plan for this year and next?
Yes, so in next 2 years, we have plan of around 250 crore, and our capacity is currently recycling capacity around 3 lakh ton, which will go up to 5 lakh tons. So this growth will come from the existing verticals capacity expansion only.
Okay, final question, sir, before we let you go. Exports is close to around 38% of your revenues. Is there any slowdown from the export market? And also, when you joined us the last time, you were talking about getting into newer geographies. Which are the targeted geographies for you?
So we are already present in Africa, as we mentioned earlier that we are at Ghana, Togo, Senegal, Mozambique, and Tanzania.
Yeah.
Togo was the last year addition. We are working some projects in Middle East and also in South American market and Central America, Dominican Republic. So we are working on those geographies. So that next growth should come from that area as well.
Okay. Any slowdown?
Export slowdown, there was big slowdown in last year, but this year it is on the track.
Okay. Oh, all right, Mr. Sharma. Thanks a lot for joining in. Appreciate your time here. That is the word coming in from Gravitas.